Woo! How are we doing today, Neo Bulls? Welcome back to another video in which we are going to be covering Nio stock and what it looks to do going into next week. What is the crucial level that you have to break and close above, and where we are currently. So before I begin, there was one thing. Shout out to my boy Mamoon Dusty gave a donation. So God bless you, man. I appreciate it. He asked a question going over resistance levels and why some are harder to cross than others, right? And I can give many different answers. There's a lot of different technicals that go into the levels that I place, but one very unknown one that is always good to look at is your VRVP, your volume profile, right? Where volume historically on the stock has seen the most trading will give you oftentimes a point of control in the stock, and then also levels to watch for potential bearish volume. So I'll give you an example, right? 771, and that's going to be the thesis of this video, is 771 is a volume heavily in this range. It's the most volume in this range other than $6. So 771 has been a very, very stingy location. In fact, so stingy, we freaking, what I said in my video prior was you just have to close Friday above 771. And where did you close? Just look at where you closed. I mean, just stupid. Why, Nio? Why would you do this? Nio closed at, you guessed it, 770. Why? Just do the thing. Just close at 771. And in doing so on the daily candle, you made a hanging man candle, typically bearish, but seeing as though you had a long wick and you look at the chart's historical trend after getting hangman candle. This was a hangman candle, right? And that actually marked the bottom before run up. This was a hangman. You only saw like a 5% dip. And so historically, they haven't been the end of the world, but that is a technical bearish candlestick pattern. But to go a little bit further, right, your VRVP, your volume profile, is going to give you key resistance within the stock, and it also gives you your point of control here at about 452. And if you look here, you can see how many different taps along this horizontal trend line you got, and how you rejected it, broke back above, rejected it, broke above, you based on top of it before seeing your squeeze move, right? So 456 is a very crucial level on this stock, and it's shown by the volume profile, right? You can see just how much was traded here. But additionally, you can also quantify it by how many different taps of a profile you have, right? You can see 771 is not a new level to this stock, Nio. You can see you rejected it twice here, rejected it once, and then you traded flat underneath it, above it, bouncing. And if you go all the way back, 771 was the location that you tapped your head on, retested support, and then gapped above. And once you got above 771, guys, it was a sale. You literally just cruised all the way up to $16. That is a 100% move. That has happened every single time. However, 771 additionally was one of your IPO resistances, right? You bounced off of it here. Ooh, that's making it tough. I'll just have to live with 770 maybe. Come on. Do the thing. 772, whatever. Rejected it. Broke above, support, broke above it, broke below it, right? And then you also, that's 5, but that was also a crucial level. So 771 is an absolute wall on this stock that oftentimes when you've broken above it has meant immense upside, or when you broke and retested has meant immense upside. But looking for confluence is what I would say is also can help me identify these levels, right? The reason that I have 5 or 953 marked is because it was perfect. I mean, look at how you wicked off of this level. Wicked perfectly. It's the beginning of this gap, which oftentimes is defended by bears. Wicked perfectly, rejected, wicked perfectly. So almost more than 771, 953. And then in tandem with that, right, 953 also acts as your 200-day weekly EMA. So for me, that technical confluence there, the more that these stars align, the less I begin to think that it's a coincidence, and that the more likely it would be that you actually get to that point in the stock's chart. So that is just my methodology to give you guys a quick rundown and to answer your question. But Nio Stock, I hope you guys learned something quick there, but Nio Stock had a great week, a fantastic week, a green close above your previous 2 wicks, which is also still bullish, right? When you're talking about creating higher weekly closes, that is a good thing. There was one negative thing, though, in this weekly close. You made a higher high off lower volume while making a bearish candlestick. So for me, if you don't see an immediate pop or some kind of immediate rebound by the stock market Monday morning, I think you might be dialed in for a little bit of consolidation or a possible rejection down to this gap fill here at 622? 632. A possible rejection down to 632 because of the rejection at 771, the candlestick close, and then the lowering volume. For me, that is enough for me to have that biased. However, the long-term chart is still probably one of the nastiest charts I've ever seen in my life. If you go to the monthly, you can see 3 large candle bars supported by 3 large volume bars. That is bullish continuation. And for those who haven't seen my channel before, let's Diddy 3 white soldiers. So 3 white soldiers is one of the best, if not the best, strong reversal pattern from a bear trend, right? And you can see here, these are just examples, but what you should expect is boom, 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 right? Whole-bodied candles. In this instance, it's on the freaking monthly chart, guys. If you haven't acknowledged how bullish that is, it's insane. But what is not surprising is oftentimes after 3 white soldiers, this means that you have come to... right? You've come to a bullish reversal in the stock's history, and then oftentimes you consolidate and create a larger formation before you see one of these absolute boom, boom candles, right? Before you see something crazy. In almost every example, you see it. You see this, 1, 2, 3, consolidation, boom, 1, 2, 3, consolidation, 1, 2, 3. So it acts as almost a perfect self-fulfilling stair-stepping action. And it's not like this every time, but these are all examples of what you could possibly expect on Nio Stock. And it's an absolute gorgeous thing to see that you are basing at such a high level, guys. I mean, just take the win and acknowledge that in July 31st or July in general, we were down at $3. We're now at $7.70. So the momentum that you've gained on this stock is quite insane. And I go back to the weekly time frame. And I do so because if you're able to hold at these levels on Nio Stock, regardless of what happens in the market, right? Because there's going to be volatility that you can't control. But if you're able to balance and trade within $7 or $6, guys, this 50-day EMA is going to come up and act as significant support just as it has in the past, right? When you initially had this 3 white soldiers on the daily time frame, you then did exactly what we're planning to do on the monthly, right? You then consolidated into the 50, the 9 crossed the 50, and then you saw a 31% week. Beautiful. Picasso, right? You couldn't draw it up much better than it did. And this is that perfect price action that we're looking for potentially on the monthly, right? And I hope that puts into comparison, right? You go to the monthly time frame, you see 1, 2, 3, a consolidation candle, maybe 2, maybe 3, right? We might be in for a boring quarter. That's possible. I've seen it happen, right? Or a kangaroo market where it's bouncing back and forth. But eventually, and we'll confirm this by the volume, if you see consolidation or slight red on low bullish volume, a low candlestick like this, guys, and you would be set on Nio to rip the faces off the bears. I mean, it would just be silly. And you can see here almost perfectly that's what you did on Nio Stock. Almost perfectly. It was on the weekly time frame, actually. So look at this, right? 1, 2, 3. That is a 3 white soldiers in the weekly time frame. 1, 2, 3 consolidation candles and less red volume, less bearish volume than green. And then, boom, you saw a crazy volume stick of 500 million shares. Or, yeah, 500 million? We getting that right? Yeah, 500 million. And the largest weekly candle close of this run so far. So imagine if that happens on the monthly time frame. If you see a monthly candle that eclipses these 3 that were 40, 30, and 20, I mean, my goodness, would that be insane? So I am okay personally with a little bit of sideways price action here to allow some of these lagging indicators like the 50-day EMA to continue to swing up and be that floor, to be that base and that foundation for Nio Stock to continue to form higher bases and higher highs. So that is my Nio Stock DD for the day. I hope you guys loved it. And I just want to give you a reminder. The best is yet to come. Look at that quarterly MACD chart, guys. Look at how close you are to crossing, and look what happened last time that happened, right? 1, 2, 3, and then a blow off top at $66. So if you guys loved the video, I love and appreciate each and every single one of you guys. Make sure to slap the subscribe button and to slap the like button. We will continue to cover this stock. And you know the price is $9.40 is your top side test for next week. And the mandatory is you have to remain bullish if you close above 771. I hope you guys all have a wonderful rest of your day and tune in for the next video. Peace.